Welcome to another episode of The Brand Called You, a video and podcast show that brings you leadership lessons, knowledge, experience, and wisdom from hundreds of successful individuals from around the world. Today, I'm very privileged to welcome not just a very, very dear friend, a fellow IPO member, but a very senior and accomplished finance guru from Hong Kong, Water Cheung Ching Wing. Water, welcome to the show.
Thank you, Ash, for having me.
Thank you. Water is the senior partner and CEO of StormHarbour Securities. He's the chairman of Carbon Care Asia. He was earlier with DBS, the Royal Bank of Scotland, CIBC, and Chase Manhattan Bank. He's an avid fintech investor who's involved in the tokenization of financial assets. He's a columnist with several Hong Kong newspapers and magazines. And as I mentioned, he's a fellow IPO member. So Water, what would you say are three key milestones in your life or your career?
I think coming back to Hong Kong, I did my college and my MBA. I have an engineering degree in Canada, and I worked there for a good 7-8 years. And in 1993, because of family reason, I actually returned to Hong Kong. I was then heading up the derivative trading for the regional market, for the emerging market, for the Chase Manhattan Bank. And that was a career breakthrough, and I have the good luck or the perfect timing to witness the growth of derivative products in this region. Right. So that was a career breakthrough. Yeah.
Fantastic. So let's talk about the world that you have chosen to live in, work in, which is the world of finance and fintech. Yeah. For thousands of young listeners to my video recording and on our podcast, what is fintech and why is it such a hot sector today?
Well, fintech by definition have the fin and the tech, right?
Correct.
The tech, most people refer to the internet world, and the fin is the old finance. And I think over the last, call it 6 to 8 years, fintech has evolved in different stages. Initially, people are more focusing on the consumer market, the C2C market, and try to create a new connectivity. But I think the business has evolved more to now looking at a B2B or a C2B type of market. When I say C, that means consumer.
Yeah.
B mean business. And because of the abundant availability of technology, that's actually a big impetus to fintech. I remember on my personal investment history, I started investing in a social trading platform in China going back to 2014. And that was the year when Apple handphone being introduced to China, and Facebook just got listed in the States, although they were not making any money then. But yet the introduction of the smartphone was a big breakthrough in terms of doing the social networking, having online communities, and I think technology had a big bearing in the development.
Yeah. Okay, and wherever I read, the fintech space seems to be booming. And yet, when I read more about it, I think it's overcrowded. I can't understand how many players there are in this space. What are your thoughts for the new entrants?
In fact, the world is getting more and more difficult. And there's an old Chinese saying that the watermelon will lean on the big tree. So I think what it means is the market become very much like oligopoly. If you are not going to have the massive capital and the fundraising capability, it's actually very difficult to survive. And I sort of alluded earlier to the differentiation between a C2C and B2C. Everyone wants to have another Facebook company. Okay. That's a huge success on the C market. But yet today, the client acquisition cost is very expensive. Rather, I think the opportunity for the younger generation is actually look at the process of the financial institution, look at the back office, look at the mid office, and try to come up with a replacing solution that can improve the efficiency. But then if you really got a good technology, the client acquisitions cost is much lower. You don't need to have 5 million users in order to get the VC attention.
Right.
You just need a handful of good, like JP Morgan and whatnot, a good account, and then you're off to the run. So I think my message to share with the young entrepreneur is don't get too overexcited about the past success. You need to carve up your own new one. Yeah.
Okay, very interesting. So, you are involved in, to use the phrase, tokenization of financial assets.
Yeah.
I don't understand what it is, and I'm sure many of our listeners and viewers will not understand.
Yeah.
Please help me understand, what does this mean?
I think for a lot of us, the first exposure to token, Bitcoin is the classic case, right? But if you ask me what's the underlying asset of Bitcoin, there's nothing, right? I think with all what we call the utility coin world, with the exception of USDT, which is a stable coin, which claim that for every $1 of US coins they issue, there's a $1 of greenback as a foundation or as an underlying asset. But most of the coins that we have heard in the first generation are utility coins. Basically, they're meant to be facilitate a transaction rather than have any inherent value. And then come the token 2.0. A number of external factors are happening. The government finally come to terms that I cannot get rid of all these geeky guy. Okay, so Bitcoin is going to stay. But to maintain the stability of the financial system, let me come up with a rule of game. Let me come up with my own version of digital currency. In China, they have launched something called the DCEP, which stands for Digital Currency Electronic Platform. But in that concept, there's no zero intermediations, or like there's no anonymous user, things like that. It's a very transparent and platform. But yes, the means of transaction is digital. So that's one factor come to play. But what I mean by security tokens is every token actually are backed by a real asset. It could be a shares in a company, it could be a loan, it could be a hotel, it could be a property asset. So, but the key thing is everything is backed by real asset. And equally important is that now the regulator required that the entire issuing process and the subsequent trading of the asset need to conform to what that deemed as the market norm. So now trading a security coin or issuing a security coin is no different from issuing a bond. But instead of a document putting in a lawyer, you probably have a document blockchain and store somewhere. But the process, and also one thing our finance guy are very concerned is the KYC. They are now required the KYC angle. So to onboard the client to invest in the security coins, you actually need to do the know your client process.
Very interesting. So I'm going to ask you a related question with the Bitcoin. When I was growing up and whatever little economics I studied, what you said was that every financial product had to be backed with something which is a substantive asset. What is Bitcoin backed by?
I think the short answer is nothing. A qualifying answer is everyone believes there's a limited supply because based on the original algorithm, the number of issue coins, the production rate decay along with time, and there's a finite amount being. So that creates some kind of a demand or belief in the demand of the coins. But the short answer to your question is no. But yet, I was a bear when Bitcoin first break 6,000. Of course, I was that wrong. The Bitcoin price go up to 18,000. Then it come off. And then on the second wave, I'm actually a believer because I start seeing the some very serious institutional player are coming to the market. And I'm also seeing some of the money. Last time when people make money in Bitcoin, they will convert it in US dollar and then go home and have party, open a nice bottle of wine and whatnot. Now, no, people actually keep the money in the so-called the wallet or the exchange. So they keep the money in the cyberspace. which is a great demonstration of trust. They want to continue this game. So I think the game will carry on. I don't like the price volatility because I think it actually hurt the long-term survivability of the coins rather than helping it. But it is what it is. Yeah.
Very interesting. So moving on, you're also an expert in real estate financing.
Yeah.
Well, what is this, Water? Please help me understand.
Interesting. Yeah. I as I mentioned, I came from engineering background. I did civil engineering and I did an MBA. And I entered finance. My first job was a quant in a trading room in Canada. At that time, I basically despise property. I think property is some low tech, lazy money to be made and so forth. But as I grow older, I'm totally repentant. And I think a lot of the wealth, particularly in this part of the world, are created and still stored in real estate.
Correct.
So real estate finance has become part and parcel of my life and my professional activities. I was involved going back to 2003 in the very early round of the emerging market REITs. REITs is a real estate investment trust. I actually took the first Chinese company who leased the shopping mall in Hong Kong. I was doing the first so-called China REITs in offshore in Hong Kong. Unfortunately, I don't know, I'm a bit ignorant on the Indian market, but if you look at the China market, the entire securitizations market is still not yet that well developed. Part of it is another company law issue, like in China. Setting up a trust with no natural person as an owner is still a great area, whether you can do it. But a comprehensive trust law actually requires the setting up of SPV, which is backed by asset, but there's no so-called shareholder or ultimate beneficiary. So no one is going to talk to court because this company bankrupt or anything like that. So that was the backdrop of going back. That was, good 17 years ago when I first did the first China REITs. I think real estate financing took many forms. The REITs market was booming at that time. Interest rate, people remember, we just come back from the aftermath of SARS. So interest rate is still very low, but asset value is very low as well. So for the property owner, there's an incentive for them to sell their property through the securitization platform, through a REIT. But things are not the same now. This day is a bit have a different parameters, so the market condition has changed.
Very interesting. So you have spoken about REIT a couple of times, and again for our listeners, REIT seems to be the order of the day. REIT, for our listeners, is REIT. Help me understand what is a REIT and how does a common person invest in it?
So by definition, our real estate investment trust, right? So it's in a trust format, and they are both public REITs and private REITs. Public REITs are those listed in the stock exchange. And Japan has a huge J-REITs market. And a REIT is a very interesting, a hybrid animal between bonds and equities. It have all the trading characteristics, like it's listed in the exchange, like it's stocks and whatnot. But from an economic payout point of view, it's very much like a bonds. So usually a REIT will own a handful of very stable income generating assets. And their mission is to have all the cash flow, the rental income after expense, at least 90% distributed to the investor as a dividend. So from an investor perspective, if you invest in a property company, you are at the whim of the management and the majority shareholder, how much cash you get out of that portfolio. And that's why if you look at the Hong Kong stock market, a lot of the property company are trading at a deep discount to book value because people somehow feel that the full value of the asset is not distributable. So REITs have this benefit that you don't need to argue. The net income, the cash flow will got distributed to the investor. So in that sense, it has a nature of a bond characteristic. So it's an income stream kind of investment. In fact, a lot of the REITs are priced off the 10-year government bond plus a spread. So REITs is, I think, is a very interesting animal. But for something to happen, each stakeholder must have some incentive to do it. Last time when the market is booming, because a lot of the asset owners are looking for a new way to unload their asset or monetize their asset. So typically, in a lot of cases, the property owner don't put the real asset into the risk. They put some boring asset, not that attractive, not that something that we'll be proud of, but have a very stable income into a risk. And then people, the investor, buy the risk not because it's a token building, but because the cash flow is decent. So different parties have different requirements. Yeah.
So moving on, we spoke that fintech is finance and technology.
Yeah.
Right. You are a finance guru, and you are obviously following what's happening in technology very closely. So tell me, what is happening from a finance perspective in the global digital economy?
I think it's funny. It's a bit like the Bitcoin development as well. Initially, the whole idea was set up by some geek, non-finance guy, okay? And I still remember Jack Ma have a very famous statement saying that what I'm doing is the finance of internet, not the internet of finance. What it meant is the traditional banks or bankers, when they think about fintech, is, oh, don't worry. Instead of opening a branch, I just have an internet shop front, and then I will do the business as the old way. But the true internet people think about it, they think about it starting from what is a internet community and what are the financing needs. Being a bank or not is never the consideration, and I think there's why they beat the biggie in round number one, because they are far more innovative. They're more they have more understanding on the user needs, and they create quite a number of interesting ventures. But now it was a bit like the David versus the Goliath. But now the Goliath come back and say, no, I know I was wrong, but I got deep pocket, I got good people. I'm going to buy up all this venture. I'm going to do something totally new. So they learn from the game. So we are in the second round of this David versus the Goliath game, and I don't know who is going to win. And make it a bit more difficult, more interesting is last time. You can call Facebook, David. You can call Twitter or whatever. The internet startup, David, but now they're so huge now. So it's hard to say who is actually David or who is actually Goliath. And I think that's an interesting game. Being an investment banker, I remember 10 years ago, I finished with my last paycheck and I started my own company. I remember that time, because of the global financial crisis, a lot of people look down or talk down on investment bankers. They're saying they're greedy, they take big paycheck, they're not serving the world. But at that time, I make a very, very interesting statement in a newspaper and got good feedback. Is look at all this internet guru. They are the standard, typical type A mentality, no different from an investment banker. They are greedy. Their style are take no prisoner. And look at how big they have grown their empire. And now suddenly the government or the public getting very nervous now. They want to have a more balanced game. I think in reality, the world needs this type of type A person to move it ahead. But there need to be somehow some check and balance. Yeah, otherwise the ruling could be too aggressive. Yeah.
Very interesting. Very interesting. So I'm now going to move on to another part of our conversation. For someone who spent his entire life in the finance world and who's built amazing organizations, what are some of the core values that you believe in?
I believe in good karma. I think doing something good will come back and help you, and also give you in your heart, you have a good feeling. So when you face a failure, face downturn, you can handle it in a more healthy way. As a style, I think stay curious is good, so that you learn something new every day, and that make you keep you young. I think that's also very important. Yeah.
Interesting. And my next question, Water, is on the millennials and the Gen Zs. You and I have spent almost 4 decades working. The world now belongs to the millennials and the Gen Z, and you're younger than I am. What, in your opinion, are the millennials and the Gen Zs doing to change the fintech business?
I think they have done a lot. And I think using a very old financial term, when I work for a bank and the management or the board always require the senior management to do a zero-based budgeting. For those who know the term, they know what I mean. But actually what it means is forget about what happened in the past, okay? Don't tell me last year you spent $10, this year I need to spend 12. Start everything from a zero base and then rebuild your case. I think they are doing the business based on the zero-based approach, which gives them a lot of leeway. But on the other hand, I'm also concerned the structure of the job market definitely will be different from 40 years ago. And whether it have enough job to keep the young people gainfully employed, that always concerns me. Because a lot of technology, instead of creating jobs, are actually killing jobs. And it's good to see some youngster 2 years after graduating become a CEO of something, CEO of another thing. But sometimes I think in life, you need to go through a boring, grinding stage in order to be fully mature. Being a CEO after 2 year graduation may not be the right thing for everyone. Yeah.
Right. Well said. So what I'm now going to move to the last segment of our conversation, which are some questions for you personally. I think I have time for 2, maybe 3 questions. So, from the stage of life where you are at today, as you look back at a very successful career, achieved so much, listed companies, continuing to hold some incredible assets, what does success mean to Water?
I think, and I'm more come to term today. I'm a well-off middle class, okay? If today I'm not e-cashing, I will never be e-cashing. Okay? I'm too young to have that too. I think the success in life is not defined by how much money you make or whatever possession. It's to fulfill your talent. I think everyone born with a certain talent, and have the opportunity and work and the opportunity to really use your talent to help yourself first, and then also helping other people is the key. Is the key message here.
Fair enough. My next question to you, and it's probably my last question to you, is on failure. You and I come from 2 communities in the world, the Chinese and the Indians, where we have never really told our children it's okay to fail. We've always said, come first, go to the head of the line, run faster, etc. I mean, I can certainly say that about India. I don't know much about China, but I'm assuming large countries have the same problem. And yet we fail a lot. My question to you, my friend, is what have been some of your learnings from some of your mistakes?
I cite 2 incidents. One is a more general one. I spent a good part of my career as a trader and also running dealing rooms. And believe it or not, I mean, of course, I lost money big time. I mean, easily in one day, I lost in the magnitude of tens of millions. That happened to my life. And then you need to look beyond that. In fact, against my preference, my son is now 22 years old, has come up with some aptitude towards trading stocks. And the first thing I sort of alerted him is, in order to be successful, you must know how to handle failure. How do you, when you lose money, how you build upon your portfolio and slowly but steadily rebuild your wealth. I think that's the key thing. So this is a very technical. This is about handling failure. On a more personal career path point of view, yeah, we all have our glorious day working for big organization. I run a portfolio of something like 20 countries, 2,000 people and whatnot. But once you become a very senior management, you actually spend a lot of time on being a firefighter, also spending a lot of time on internal politics. And I hate some of the internal politics. I'm more a very task-driven person. I like to embark on projects, tackling difficulty. But once you reach certain senior level in a big organization, you become a bit like a politician and need to do out. And I used to hate it. And when I quit as I say, 10 plus years ago, quit my last paycheck, I was quite relieved and happy. But looking back, now I reflect on it. I mean, an organization actually needs some good politician to facilitate, to oil it. Okay. At one time, I may deem myself as a victim. How come I'm technically so competent yet I didn't get the biggest job and whatnot and become very bitter. I learned from looking back. I think that should be the way, because an organization doesn't need the smartest person to run it, but the best facilitator probably is a better term. So I think I also learned from some career failure in that sense. Yeah,
fascinating, very, very fascinating. And as far as your son is concerned, we can certainly say the apple doesn't fall far from the tree. So he's following what his father did. But Water, thank you so much.
Thank you for having me. I really enjoy it. Okay, talk to you soon.
Thank you again.
Bye-bye.
Thank you. Bye-bye. Thank you for listening to the Brand Called You videocast and podcast, a platform that brings you knowledge, experience, and wisdom of hundreds of successful individuals from around the world. Do visit our website www.tbcy.in to watch and listen to the stories of many more individuals. You can also follow us on YouTube, Facebook, Instagram, and Twitter. Just search for the Brand Called You.